expected at 0.2%, and it came back at zero. It came back at zero. The core CPI year over year was expected at 2.8%, and it came back at 2.6, beating expectations. CPI month over month was expected at negative 0.1%. It came back at negative 0.4. At CPI year over year was expected at 3.8%. It comes back at 3.5%. We were talking about this yesterday. And, we have a dramatic 1 month decrease. The decline to the all items index was the largest 1 month decrease since April of 2020, where it fell 0.8%. Over the last 12 months, the all items index increased 3.5% year over year after rising 4.2% in May. And it's great news for Kevin Warsh. Everyone expected energy to drop. There was good news in car prices, though, in shelter, in apparel. And this essentially gets us in a situation here where those rate hike odds that were being pulled forward into, and I'm going to refresh this here, there was a 36.3% probability for a second hike in 2026. And let's just see where those have traveled to here. They've been pushed all the way out to March again. You can actually see where there's actually a cut in September of 2027. So dramatic shift inside of the perception of how hawkish the Federal Reserve will have to be in the future. Let's go over our markets here. You can see the dollar weakness trade. This is what we were talking about as we were going into our overnight time frame, where that dollar stick save here, this top of this range, this high up here, this is what created the rally. This dollar weakness trade is what helped the indices rally from their support levels on Wednesday last week. So this is the pullback that we were inside of on Wednesday. And the dollar weakness trade that we had from that 50% retracement long from lows correlated with this previous high. As we were going into the overnight time frame, we were noting that previous high, we were running into it. And at the top of that range, a dollar weakness trade from the top of that range, well, it just happens to correlate with the next long setup in our series on the indices. And so, you can see here that support level that we had here going into our morning time frame, the dollar weakness trade fuels the indices rally into a continuation of its trend. When we're looking at this from the perspective of gap fills, we are going to be falling into a gap fill at the 75, 63.50. These are still ranges. They certainly are. Now pay attention to what is the dollar back at the bottom of. It's at the bottom of a range, isn't it? So what happened when we came out of the bottom of this range coming out of Friday during the Asian and then European session? What was going on the indices at that exact time? Well, we had the indices essentially falling from or making pullbacks. That's exactly what's happening now. So we're starting to make that pullback back into the bottom of the range. If the dollar rallies from the bottom of this range, the indices sell off from the top of their range. We'll see what Bank does here at the open. The VIX is still inside of a series of traditional shorts. It's actually a very technical series. We were even giving it more room here, but the VIX ran right to its line in the sand. It sticks. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.